Let's take a look at some charts on Ethereum Classic from this week's article on Brave New Coin. So you'd be remiss not to immediately compare ETH Classic to Ethereum in every metric possible. For me, I kind of view ETC as an emergency backup should ETH completely fail and crumble under its own weight, because otherwise I do not see ETC overtaking ETH in any metric imaginable. The only metric that will flip for protocol reasons would be hash rate. So as ETH moves to proof of stake, the hash is going to go somewhere and it's going to point to ETC. That'll change some of these metrics slightly, but in general, ETH pretty handily has most everything. I mean, especially fees, that's the real tell. ETH is going through a scaling crisis at the moment, so things like DApp fees or smart contract fees are extremely high right now. But it also says people are using ETH and they're not using ETC. There's no tether on ETC, for example. So that's something to keep in mind immediately. Should I buy ETH or ETC? Well, let's see. What does it look like versus an on-chain activity? Well, it's kind of dead, right? If we look at the issuance or inflation, you can see ETH is basically around 4.5, whereas ETC is around 6.5. Another issue to contend with, holding one or the other long term. The difference here is that ETC has a fixed supply, whereas ETH won't. And again, ETH is switching to proof of stake, whereas ETC is unlikely to ever switch to proof of stake. So it's good to look at the whales for any coin. So Grayscale basically owns 10% of the circulating Ethereum Classic, which are pink sheets, kind of OTC, Wall Street accessible, that sort of thing. So should the tide ever turn on ETC and the AUM, assets under management, comes off significantly, you'd expect a price decrease for ETC. Not really rocket science, but to see one entity control that amount of coin is worrisome for anybody, really, because if Grayscale or a large holder here just decides, you know what, that's enough for me, it's really going to have a big effect on price. Look at the ASICs. These are the @hash ASICs that can mine ETH or ETC. And my guess is they flip between one another depending on profitability. Recently there was an @hash miner released after a year-long drought here, but I don't really expect many more to be released, because if ETH is switching to proof of stake and ETC isn't really that profitable to mine, I don't really see a massive ROI here for new miners, either as an ASIC manufacturer or as a purchaser consumer of the ASIC. You can see here that the hash rate kind of perked up significantly here. Again, I think this is profitability algos switching between ETH and ETC. And as soon as ETH becomes more profitable to mine, there's no reason to mine ETC, really, unless you're an ETC maximalist. But right now they're essentially the same from a mining ASIC perspective. If you can mine ETH and get more money, you do it. So I think that's what we're seeing here. Transactions per day and average transaction values have also declined pretty significantly. You can see transactions per day now hitting a multi-year low. Never bullish for a coin when you see that. It's been raging basically for 2 years. Nothing really new happening in the transactions per day front. So if anything, this tells me that most of these transactions were mining related or speculation related, not necessarily organic activity or economic activity that really means anything. That's definitely bearish. If you look at NVT, which is an inverse metric of economic utility, it's rising again near historic highs, certainly, whereas active addresses are the fill here are falling off to historic lows. So again, this does not look bullish from an on-chain activity perspective in any way you could slice it. If we look at technicals, Bitfinex long shorts, yearly pivots, VPVR, 50 and 200 EMAs, RSI, and a pitchfork. So in general, you can see price kind of mirrors on-chain activity. When there was that new local high pop, on-chain activity went way up. Then on March, everything tumbled and on-chain activity fell. This pitchfork is projecting continuous lower lows, so it's bearish. The median line here is where price wants to be. So if this pitchfork continues to be valid, I'd expect ETC to dip down here into the twos again, if the pitchfork invalidates, which looks like it's trying to do, I mean, it tried to do that before and failed, right? So it's hard to know. This is just an estimate, right? Here's the trend. It looks pretty clean. We look like we break above it and then we fall right back below to the median line. So if there's a market-wide crash again, I'd expect this to swiftly hit this median line. If not, it looks like the bear trend is over. If we look at the EMAs, they are completely flat, kind of zeroed out. So from that perspective, it's basically a coin flip. You can see the yearly pivots here, but kind of boxing this in. There's no real VPVR resistance on the upside in the current range. So to me, all this just looks trendless and nothing I want to touch right now. There's a big VPVR resistance up here from 12 to 18. So just all little things to consider that basically add up to, it's a coin flip for me. There's no edge here that I can see. Looking at the Bitfinex OI, mostly long, as are most USD pairs. Nothing really special there. Nothing special on RSI as far as bull or bear divs. Everything's kind of just zeroed out, waiting for some catalyst for momentum. Looking at the cloud, it's about as mediocre as it can get. It's at the bottom of a bearish cloud, ready to fall out in the bottom, which is screaming bearish continuation. It failed an edge-to-edge attempt twice. Usually price likes to hit the 50% mean reversion target. On the flip side, if this just stays sideways for like 2 months, it has a decent shot at burning off all this resistance and attempting some bullish momentum. But where this sits here is just not anything I want to touch. There's also an argument for this inverted Adam and Eve VU thing. So any lower low here should get some substantial bearish momentum, just as this multi-month Adam and Eve started a bull trend. This has a shot at a low time frame bear trend for sure. And looking at ETC, BTC, definitely extremely bearish, below the 200, below the cloud. 5200 is bearish. There's no real volume support down here. You can see again this Adam and Eve thing that blasted off, and all that's retraced now. It's even below the support resistance level. The only silver lining I can see here is again this W double bottom attempting to form, just like here and here. I mean, you can see this over and over again on lots of charts. Here's a failed Adam and Eve. It failed to break above. So that's what I'd watch if I'm a ETC bull here, is that W double bottom potential. But otherwise it just looks like slow drip bleed, generally extremely bearish. I mean, it's had chances for falling wedges to break up that failed, chances at mean reversion through the cloud that look like they've failed. So none of this is bullish. And upside resistance definitely at 0012, very strong VPVR node there. Strong resistance at 90k sats yearly pivot. Just all sorts of reasons I would never touch this right now. I really think the next trade on this is a long, once it convincingly breaks 13 or 130k sats. Because any of this macro W thing, I don't know, but it just doesn't look good for ETC on any metric.